Thank you for joining me in another intrinsic analysis video from Learn.Invest.Achieve channel. Adobe came as a special request from Fisha Ventures 6257, so please let me know if you have a specific stock in mind and I can prepare analysis for. Also, do you know that 2 clicks are an easy thing for you to do, but it means a lot to me? So please support this channel by clicking the subscribe button now and liking this video. And before we start the analysis, I want to remind you that this video is not financial advice and is for entertainment purposes only. To perform this analysis, we go over the last 10K report, which is the annual report, to learn more about the financial and non-financial information about the company. This report, along with other different types of reports, are available for us to download and use from the SEC website, as you can see here. If you are into investing, I advise you to download the latest 10K annual report and go over it because it helps you to make an educated decision. Adobe Inc. has a fiscal year that ends in the beginning of December. So technically the company just finished its 2022 and has 40 days to file the 2022 10K report and make it available to investors. Also, Adobe has one equity security with the ticker symbol ADBE, and as of January 2022, there were about 472 million outstanding shares. But the company is repurchasing their shares, and in the third quarter report of 2022, we can find that there are about 465 million shares as of September of 2022. Which means they bought about 12 million shares between January and September, and this is the first interesting information about Adobe. The company was established in 1982, so this year marks their 40th year in business. And it is one of the largest software companies in the world because they have over 30 different software programs for creative professionals. Unfortunately, I have a bad news for dividend investors. Adobe doesn't distribute dividends, and they are saying here that they don't expect one in the near future. When we look at the last year's revenue, we can see that it's made up of 92% subscriptions revenue, 4% product revenue, and 4% services and others. This is a graph I added to visually show the revenue types and amounts in 2021. Also, it seems that the Americas market is the company's largest market, then Europe, Middle East, and Africa are next, while Asia and the Pacific market is Adobe's smallest market. Now let's move to the Excel file to analyze the financial statements and forecast 2022 numbers. We will look at the financial data from the income statement, balance sheet statement, and the cash flow statement for the past few years, and we will calculate the ratios that are relevant for this analysis. Starting with how well the management is controlling the expenses, we can see that the cost of revenue expenditures and the operating expenses are increasing uniformly with the increase of the revenue since 2015. So a thumbs up here. Also, the free cash flow is increasing every year, which makes sense because the revenue is increasing and the expenses are under control. And in this graph, we can see the progress of the free cash flow to revenue ratio, which is an important part of forecasting 2022. So it should be safe to say that it's almost consistent and it's about 41%. Moving on to see the company's revenue across a number of years, the graph is clearly showing that customers are happy, returning to consume more products, and Adobe is attracting new customers. We can say that about the customers because if you remember earlier, we said 92% of Adobe's revenue came from subscriptions, so if the customers are not happy, they will simply stop renewing their subscription and move to a different company. A question that we should answer for every company is the company solvent? And the answer here is yes, because only 15% of the assets are funded by liabilities in 2021, or in other words, the debt to asset ratio is 15% in 2021, and it has been decreasing since 2018. And here's another graph that shows the debt to assets ratio. Also, the company earned about 58 times the interest expense in 2021, so they are well able to service their debt. Looking at the outstanding shares, which is another important key to forecast 2022, we can see that the company purchased back 34 million shares and reduced the outstanding shares by about 7% since 2015. Now the remaining 93% of the shareholders will get 100% of the free cash flow. In my opinion, we should assume that the company will not buy back any more shares in Q4 of 2022 because in the first 9 months of 2022, Adobe repurchased about 12 million shares. So we'll use 646 million outstanding shares in the forecast step. To find the intrinsic value of any stock, we need to forecast the revenue first. And to do that, we need to find a correlation between the revenue and another item in the financial statements if we want to have a reasonable forecast. And since it's a software company, in my opinion, research and development is what goes into improving the products and increasing the revenue. So I tested the research and development to revenue ratio, and I'm amazed about the consistency of this ratio. And as you can see here in these two graphs, the left graph is the annual revenue and the right one is the research and development. So in my opinion, there is a direct relation between the two, and the revenue depends on the research development expense. And we should use this ratio to forecast 2022 revenue, but to be conservative, we will use the average of the past 3 years, which is about 7.05. Which basically means every dollar spent for research and development will generate about $7.05 in revenue. Now I think we have all the forecasting keys, because we have the research and development to revenue ratio, the actual research and development expense in 2021 that was spent to develop 2022 and other future products, we have the free cash flow to revenue ratio, and the outstanding shares the same as the outstanding shares of Q3 of 2022. Also, we need the return on investment, which is a number you as an individual investor decides, and I like to start with 5%. And we will not use a discount rate for this analysis because the annual report is about 1 month away. So that will give us about 18 billion in revenue and 7.3 billion in free cash flow, which means $11.40 free cash flow per share. And if we use 5% return on investment, this will give us about $228 intrinsic value for Adobe Inc. stock. But the current stock price is about $336, so the stock is overvalued by about 47%. If we change the return on investment to 4%, that will give us about $285. And if we change it again to 3.4%, it will be around the current stock price. Therefore, in my opinion, the stock is overvalued at 336. Probably a 4% return on investment is what the market is using to price the stock at 285. Because when we look at the stock price chart on both September and November, the stock didn't go below 275 and 285. So that encouraged me to think that other investors have the same conclusion as we did and started buying once the stock was at the point that provides 4% return. One last thing before I let you go, thank you so much for watching this video to the end, and let me know if you have a specific stock that you want me to look at.